people's trader here. So now, right now, what we're looking at is seasonal tendencies, and this is by Steve Moore. Now, you're going to find a lot of seasonal tendency products out there, but in my opinion, this one is one of the best ones, if not the best. It's pretty consistent. And when you're talking about forming a daily bias or forming a bias, one thing that we mentioned was you want to do it on a higher time frame, right? And when I say higher time frame, I mean the lowest that you form your bias on is going to be 4 hour at the minimum, and that's 4 hours going to break it down. Now your entries are going to be on lower charts, but you don't want to get arrested in trying to form a bias off the 1 minute or off the 5 minute or anything like that, and then you end up wondering why your trades aren't taking off and why they aren't doing what you need them to do. All right, so it starts off with the macro, and and macro just means the big picture. Okay, so this is mcri.com. So you go there, and it's $49 a month. All right, this isn't my product. This is Steve Moore, and Steve Moore, he's been doing these tendencies for the seasonal tendency for a long time. So just to explain this a little bit, what this is, and this is the US dollar. All right, and you can pick any one you want, but so it's a US dollar historical, in the index is historical patterns, right? So as you can see, the 30-year, the pink is 30 years, the black is 15 years, and the red is 5 years. And it does it by quarters. So January to April, April to July, July to October, and October to December. And so what it shows you is the seasonal directions, the seasonal tendencies over the last 30 years, over the last 15 years, and over the last 5 years, what the seasonal tendencies are for whatever you're looking at. So this is the US dollar here, right? And this is between, so right now we're between July and October. Okay, so between July and October, you can see that over the last 30 years, for the most part, you've been bearish. I'm sorry. It's been a sell model for the last 30 years with the dollar. It's been selling off around this time. Now, that doesn't mean that every year it's going to sell off. Like right now, the market has been, the dollar has been flying, right? But when you look at this, the last 10 years, or last 30 years, last 15 years, last 5 years, between July and October, what you're seeing mainly is sell models. Okay, now you can pick different assets to look at. You can look, if you're trading futures, you can look at futures. You can look at corn and soy and all that kind of stuff. But since we're doing forex and currencies, that's what this is, what we're looking at. Okay. And so you have the US dollar. All right. And then we'll take a look at, so look at historical charts. All right. You can look at historical daily, historical weekly, monthly, historical or nearby monthly commodity. We'll just look at the historical, and then we'll click that, come down to forex. All right, so we look at the US dollar, and let's say you want to compare it to the euro. Well, that's the British pound. So now these are the weekly charts, weekly and monthly. Okay. Now for the seasonal patterns for this one, and as you can see, between July and October, it's not clear as to whether you're going up or down. I know that you see it way up here, you see it way down here, but between July and October here, you hit the high roughly in August, and then towards the end of August, and then September, right? So over the last 30 years, this is what the move has looked like. Okay, the last 15 years kind of mirrors the last 30. The last 5 years, there's been a heavier decline, right? But it's not as much of a one-way move. Like if you look at over here, there's more of a one-way move, right? But once you get into this quarter, it's not so much a one-way move. Not that you aren't going to find big moves in there, because you can see some pretty big moves, right? The beginning from July, I would say, to August, you're looking at bull between the last 15 and 30 years. But the last 5 years, you've seen more of a decline, right? Now, at the beginning of August, that's consistently a decline in the last 5 years, right? Consistently over all three, right? The last 5 years, last 15 years, and last 30 years, it's pretty much been a decline. So if you wanted to say, look at August, right, then you could see the pound selling off over the last 30 years for the month of August. And then once we get into September, then we see it starting to rally back, right? Again, not as big of a move as we see over here, but still, this is selling from the last 30 years. We can sell it between August and September, right? And then in September, we can buy it, the British pound. So let's keep that in mind. And now let's go back to the US dollar. So we'll go back to the US dollar and compare those two. Now, July, August. So for the month of August, it's not as much of a surge, but it is kind of a surge. But between August and September, over the last 5 years, you're looking at a bull run between August and September, right? But over the last 30 years, it's been bearish. So it's kind of mixed here. Now, the best time that it looks like would be to run a buy here would be in the last quarter between August and December, because you can see all three of them, they fly. I'm sorry, between October and December. You can see they all fly. But let's just compare this information here. Let's go back. Let me open it up over here again. All right. And we'll go to these charts. So this one is on the US dollar, so we'll go to the British pound and compare the two. If you just wanted to look at okay. So this gives you July to July. All right, when you click on it like that, you click on one of the months. This will give you March to March. So here we are in July, August, September. So let's compare August here, August here. So looking to sell off. The Great British Pound or the British Pound looking to sell off in August, and the US dollar is in a short-term buy for August, a short-term rise. So it falls and rises, and then for the month of August, you're looking at a possible decline. So what does that mean? Well, let's look at the chart between the two. Okay. Of course, we're in July right now. So let's go back to, and this is Trading View, by the way. Now you don't need a paid subscription to Trading View, because you're not going to be really using a lot of indicators, or really any indicators. All right, so let's mark off July to October, okay, on here, and let's compare. July to October. Now overall, you can see, and this is last year's July, October right here. This is last year because we're not here now, right? But you can see last year, between July and October, even though it was a sell model and you were looking for sales, it wasn't a lot of big moves. Now on smaller charts, of course, those are big moves, right? But let's look at the two, and you can see between July and October, look what it did. US, that was Great Britain, that was US. Look at that. The dollar between here and here, and the British pound between here and here, right? July was a clear up. July here was a clear down. So let's pay attention now to the month of July. If it was a clear buy on the, if it was a clear buy opportunity here and a clear selling opportunity here, then that means that the US dollar would be getting weaker while the pound is stronger. Let's see what happened during that particular time. Wait, did I say June or July? Oh, July. Let me mark this different. Hold on. Oh yeah, that's right. So for the month of July, for that quarter, it kind of stayed in that range there, right? Again, smaller. Those are some highs set up in that quarter, and it's set up for a selling model later on between September and December. You can see the time to buy here is in the last quarter. That's a clear buying move there, which means the US dollar gets stronger, right? The British pound gets weaker. So now let's move this to December. Let's move this to October. As you can see, October gave way to the sell model between October and December. And that we were able to see that in these tendencies. Okay, so these seasonal tendencies, if you want to set something up on the high probability end and you're looking for a directional bias, right? You're looking for a directional bias, you can set it up on the high end by there, and then look for the strategy on how to actually execute. But now you know the higher probability moves according to that time frame are most likely going to be sells. When it's somewhere in between, when it's in a consolidation, even though this is on the daily and on the smaller time frames, you can definitely find some buys in there and some sells in there. I'm not telling you not to do that, but what I'm saying is you want to make sure you're setting yourself up for high probability setups, right? And so how many selling opportunities came in this? And still there's a lot of selling opportunities, and it's higher probability. There were some buys there, of course, but we're looking for high probability setups where you don't have to worry about, you're not going against the grain. Okay, so go ahead and get your mrci.com set up. All right, and then go through the daily chart, see how often the opportunity to sell would have come in there. Now what we're going to do is I'm going to teach you some high probability strategies and some targets to actually aim for, but we've got our bias set. Okay, got our bias in order, and we pretty much know what to look for. In the next video, I'm going to introduce a few more tools that you can use, some free options if you don't want to if you don't want or you can't pay for the $49.99, then there's some free options too, and we'll show you that in the next video.